Hello and welcome. In this video, I'll briefly explain what are the TCS rules, that is tax collected at source rules, when you make any foreign remittance towards your educational expenses. That is when you or your parents pay for your tuition to a university abroad, or your parents send you money towards your living expenses, they will have to pay TCS under certain circumstances. In this video, I'll explain what those rules are and how TCS is calculated. And also in the budget of 2023, the government has proposed a change in rules which would come effect from 1st of July 2023. So I'll also explain what the current rules are and what changes would happen after 1st of July 2023 and how would they affect you. Now, before I get into the details of what are the current rules and rates for TCS and what are the new changes that the government has proposed effective 1st of July 2023, let me clarify that the TCS is not an additional tax that you pay. It is not something like a GST or a service tax. TCS is more of an advance tax that you pay to the government, and this would be adjusted against your total tax liability for the financial year. In the later part of this video, I will explain that. But what you need to understand is that TCS is basically more of an advance tax that you're paying to the government and not an additional tax. Now, as per the current TCS rules, for any foreign remittance, including money sent abroad towards educational expenses, the remitter or the sender will have to pay a TCS at the rate of 5% of the amount sent when the amount exceeds more than 7 lakhs in a financial year. That is, say for example, your father is going to pay your tuition fees from his own personal account and he pays 10 lakhs in a given financial year to the university. He will be paying TCS on rupees 3 lakhs, that is the amount exceeding 7 lakhs, which would be 3 lakhs in this case, at the rate of 5%. That is, your father will have to pay rupees 15,000 as TCS. If the money is paid through an education loan, then the rate is 0.5% and not 5%. And the threshold is again still 7 lakhs. That is, if you are paying rupees 10 lakhs to a university and the payment is done through an education loan, then your father, if your father is the co-borrowant in your education loan, will have to pay TCS at the rate of 0.5% on rupees 3 lakhs, which is the amount that exceeds that 7 lakhs. And the TCS would come to rupees 1500. Now, just to clarify that the threshold of 7 lakhs is the threshold for the entire financial year and it is not the threshold for each payment. That is, say for example, in a given financial year, your father remits a total of 2 installments to a university of 5 lakhs each. During the first installment, he will not be charged any TCS. But during the second payment of 5 lakhs, if it falls in the same financial year, since the amount in the financial year exceeds 7 lakhs, he will be charged TCS on rupees 3 lakhs. Now, the 7 lakhs of threshold is per remitter, that is per sender for a given financial year. Like say for example, the total tuition to be paid to a university in a given financial year is say 10 lakhs and the first installment of 5 lakhs is paid by your father from his account and is booked against his PAN number, and the second installment of 5 lakhs is paid by your mother and is booked against her PAN number. Now, since both of them do not individually cross the 7 lakh threshold, none of them would have to pay TCS. So sometimes by splitting the amount or paying it through different accounts, that is associating it with different PAN numbers, you could either save on paying the TCS or at least minimize the amount that is going to be paid. Now, what are the changes in the TCS rules on foreign remittance as per the budget of 2023? Now, according to the budget of 2023, there are 2 major changes in TCS rules on foreign remittance that would come into effect from the 1st of July 2023. The first one is that the threshold of 7 lakhs has been removed on all foreign remittance except for money sent towards educational expenses or towards medical expenses. And the second change is that the TCS rate has been increased from 5% to 20%, except again for money sent towards educational expenses and towards medical expenses. Now, effectively, there is no change in the TCS rates or rules on foreign remittance made towards educational expenses. So, for instance, if your parents are going to pay your tuition fee, they would still be able to get the benefit of the 7 lakhs threshold, and any money that is paid over and above the 7 lakhs they would have to pay a TCS at 5% if they are paying the money through their own personal account. And if the money is paid through an education loan, any money over and above the 7 lakh threshold would attract a TCS of 0.5%. So as far as paying tuition fees is concerned, the TCS rules are absolutely the same as before. There is no change in the TCS rules. So how are these changes in TCS rules on foreign remittance going to affect you as a student studying and living abroad? Well, these changes are going to affect you especially when it comes to your parents paying for your living expenses abroad. Now, generally what happens is when you move abroad for your education, you open a local bank account there, and whatever money is required for your tuition and living, your parents directly remit it to your personal bank account, from where you actually pay the university or use that money to pay for your living expenses and so on. Now what is going to happen, as per the new rule, any money sent to your personal bank account will directly attract a TCS at the rate of 20%, and there is going to be no threshold of 7 lakhs either. So say for example, in the earlier case, if in a total financial year your parents sent 20 lakhs to you to your personal bank account abroad, the TCS would be come to only at the rate of 65,000 rupees. But as per the new rule, if your parents are sending money of 20 lakhs to your personal bank account, it would attract a TCS on the entire amount of 20 lakhs and at the rate of 20%, which would come to almost 4 lakh rupees. So this is going to be one major change. One way to mitigate it or to lessen the amount of TCS would be to pay tuition directly to the university. But whatever money is sent to your personal account, that is the student's personal account abroad, would still attract a TCS of 20%. Now say for example, in the same scenario, your tuition fee is 10 lakhs and your parents are sending you 10 lakhs towards your living expenses. They could send 10 lakhs directly to the university, and the remaining 10 lakhs, if they are sending it to your personal account, because it is going to be difficult for them to prove to the bank or the foreign exchange service that they are opting that this money is going to be spent by my son, daughter on their educational expenses, it will attract a TCS of 20%. So as per the new rule, effective 1st of July 2023, if your parents are sending 10 lakhs to the university and 10 lakhs to your personal bank account, they would still have to pay TCS of 2 lakhs 15,000. Now another place where students could actually feel the impact of this new TCS rule is when students move abroad. Most of the students purchase a forex card from a bank or a foreign exchange entity and load it with some minimum amount of say 4,000 US dollars or 3,000 pounds or 5,000 euros or whatever. Earlier, students didn't have to pay any TCS on this because this amount was generally less than 7 lakhs. But now, since it is a forex card and it would be very difficult for a student to prove that this money is going to be spent on my educational expenses, it is very likely that the bank or the forex service would ask you to pay TCS of 20% on the entire money that you have loaded on this card. Now, you could actually get a complete refund on this, but for that, at the end of the financial year, you will have to file your own personal tax returns. Now, many students do not file tax returns in India because they are not required to, and because they do not have any taxable income in India. But in order to claim this refund, because the card would be actually issued in your name and booked against your PAN number, if you want to claim a refund on the TCS that you pay while issuing the card, you will have to file your tax returns at the end of the financial year. So this is an additional burden that you will probably feel when you actually purchase a forex card or purchase any foreign exchange in your own personal name. And since this rule is going to come into effect from the 1st of July 2023, there is still not much clarity on whether students could actually get by without paying the TCS, or by providing some additional declaration stating that the money is going to be spent on educational purposes only, they could avoid paying TCS. We'll just have to wait and watch on how things pan out. Now, as I mentioned earlier, the TCS or tax collected at source is not an additional tax or an additional expense that you will have to incur. The TCS is income tax that you are paying to the government in advance. and at the end of the financial year, it is going to be adjusted against your total tax liability. The TCS would show up in the 26AS form or in the AIS of the income tax system under tax already paid. The same way as TDS deducted on any of your income sources show up, similarly TCS would also show up in the AIS or the 26AS form. Say for example, your father is going to pay for your education and your father's taxable income in a financial year is say 20 lakhs and his net tax liability for that financial year comes to 3.5 lakhs. Now let's also assume that in that same financial year, your father has remitted 10 lakhs to you towards your education abroad. And because he has sent 10 lakhs abroad, he has paid TCS at 20% on that 10 lakhs, which comes to 2 lakhs. Now, when he files his income tax returns at the end of the financial year, the system would take into consideration this 2 lakhs that has already been paid as TCS and would deduct it from his net tax liability. That is, it would be adjusted against his total tax liability. The system would kind of calculate that 3.5 lakhs is the net tax liability of this person. He has already paid 2 lakhs, so the balance is only 1.5 lakhs. This is just explaining things in a very simple term. But what I mean to say is that this is not an additional tax that he will have to pay, but it will be adjusted against his total tax liability. If he pays more, that is, if a person pays more than what this person's tax liability is, this person would definitely be eligible for a refund from the government. So this is how the TCS is calculated. If you still have more doubts, you could definitely talk to your accountant or CA about this, and he or she would be able to explain it to you in more detail. But I hope this video explains what TCS rules are currently and what are the changes that are going to come into effect from the 1st of July 2023 and how would that affect you. I hope you like this video and thank you for watching.